Hey guys, welcome to another video on my channel, and today in this video I'm going to talk about tax saving hacks for end of financial year. As we all know, today is March 6th and we have 20 more days to do any kind of financial planning before the closing of financial year on 31st March 2024. So if you are a F&O trader, I'm going to tell you certain hacks which you can use to save tax on your overall profit. So you might already be knowing that F&O income is considered as a business income. So you'll be filing under ITR 3 or business income, and since it is considered as business income, you have a lot of provisions which you can use to save tax on the entire taxable income. Broadly, there are 5 sources of income under income tax. The very first source is income from salary. So let's say you're a working professional, you will be receiving certain salary from the company in which you are working for. So this would be considered as income from salary. So here you can claim a lot of deductions under ATC, ATD and much more. And next one would be income from house property. Let's say you own a house, you would have given it out for rent, you might have given it out for lease, or you might have a commercial property which you would have given it out for rent. So this would be income from house property. The third source of income would be income from business or profession. So income from business or profession is basically your business income. So let us say you're a chartered accountant, or let us say you're a lawyer, or let us say you have any private business. It can be something as small as a tutorial which you're running. It can also be something like your singing class or dance class which you're conducting at home, or even maybe something like an art class. All this would come under income from business. The fourth source of income will be income from capital gains. So this is if you end up holding any property or if you end up holding any shares for a certain period of time. It can either be short-term capital gain or long-term capital gain. And finally, you have income from other sources. It can be your bank interest. It can be any other income. Let's say you have done from crypto, you have won any lottery. So all these will come under income from other sources. So whenever you are declaring any income, so generally they declare from all the 5 sources. So if whichever is applicable to you accordingly, so you can broadly classify into 5 different categories and declare such income. So today we are only going to discuss about income from business or profession. This is where your F&O income is actually going to come under. So whenever you consider anything to be a business also comes with a lot of expenses, right? So no business can be done without expenses. So because you are filing under business income, you have an option to set off a lot of expenses against the income what you have earned. So let us say you have made a 5 lakh gain in F&O this particular year, right? So generally business incomes are taxed at a flat 30% rate. So they don't fall under any slab. So it's not like your salary income where you have different slabs and different brackets. So all the business income is taxed at a flat rate of 30%, right? So if your income is 5 lakh, you have to straight away pay a tax of close to around 1.5 lakh. But you can definitely reduce your tax or entire tax liability by setting off a lot of expenses against it. So whenever we have to set off any expense against the income, it has to be justifiable. So what do I mean by justifiable? We can't randomly set off our grocery expense or something else against the income what we have earned from F&O. So it has to be business related. Only business related expenses can be set off against the business income. So if you are able to justify that this particular was actually used for business, then you will be able to set off completely. So let me give you an example. So let us say you have almost around 2000 rupees as your internet bill and telephone bill, right? So 2000 rupees per month. So you can very easily set off as much as 24,000 per year because you can directly attribute it saying that I was using internet for my business. So you don't have to register a company, you can do it at a personal level. So generally people whenever they talk about this, they think that you have to actually have a company to set off the expenses, but that is not required. So you can easily justify saying that I was using internet, I was using telephone for my business purposes. So you can very well set off that income. Next, you can also set off all your railway and flight tickets telling that you had traveled for business purposes. Even this is going to be justifiable. So you can broadly travel for two things. The first one is for business purpose, for business meeting you would want to travel. The second kind of expense can just to be relaxed, right? So you don't have to go essentially for any kind of meeting. So you can still show it as a employee welfare expense, right? So even this is totally allowed. So any kind of travel expense like your flight tickets, railway tickets, Uber bills, Ola bills, all of this can actually be set off against your F&O income, because F&O income is a business income, right? So you can justify saying that this was mainly used for either business purpose or employee welfare expense. So with this, I'm pretty sure with maybe flight tickets included or with Ola and Uber bills, it will easily exceed over 50 to 60,000 per year. Next, is there something else we can set off? Yes, definitely that is possible. You will also be able to set off any kind of restaurant expense or food expense. Let us say you have gone to a restaurant or you have ordered something on Zomato, you have ordered something on Swiggy. So you can expense it, justifying that. So this was the expense when you went for a business meeting, or this was the expense when you incurred as a welfare expense. So all the employees, or for example yourself who is the proprietor of the business, would want to go and spend some time with yourself, and the expense which you claim for that can be set off. Not just this, you can also extend this towards any kind of software purchase. Let's say you buy any kind of subscription, kind of course for trading, even that can be set off. So there will be many workshops which you will be attending and much more. Expenses incurred during all of this can be set off against your F&O gain. So here we have only discussed about the expenses. So next comes purchase of assets. So when you come to purchase of assets, let's say you ended up purchasing a computer, laptop, or let's say you might have purchased a phone, you might have purchased a television, you might have also purchased a sofa, chair, table, or even for that matter a car or a two-wheeler, right? So all of this can still be attributed as things used for business. So you might use car for business because you might have to travel. You might use, for example, phone for business because you will be trading on the phone, or laptop or computer for business. So this way you can justify it and claim depreciation of these assets against your profit. So the depreciation value for each of these assets actually tend to vary. So you might have to check that with your CA and see how much depreciation can be claimed against your profit in a particular year. So this way you can actually claim a lot of expense and depreciation against your F&O profit, and assuming that everything adds up to something like 4.5 lakh, right? So you have made a gain of 5 lakh. So you have expenses worth 4.5 lakh. So that means your net profit is just going to be 50,000. So you straight out pay 30% on 50,000. You just pay 15,000 rupees of tax instead of paying 1,50,000 as your previous amount. A lot of people tend to not do this, or they miss out on showing expenses and reducing their profit in a legal way. So there is also one more provision in income tax. So some of the CAs do prefer this, some of the CAs don't prefer this, and that is presumptive taxation. Let us say your overall turnover in F&O, so you can go to any broker's back office and you can see your overall turnover in F&O. So your turnover, if it is lesser than 2 crore, then you can straight out declare 6% of your turnover as your net profit. Assuming your turnover was 20 lakh for the year, so you can straight out declare your net profit to be somewhere around 1.2 lakh. Or if your turnover is 10 lakh for the year, you can straight out declare your net profit to be somewhere around 60,000 rupees. So this both has an advantage and disadvantage. The advantage is, let's say you have made some good profit, you can straight out declare 6% of your turnover as the profit, but this comes with one very important clause that you have to stick to this for 5 years. That means next year, let's say you end up actually having a small loss. Even in that case, since you have actually chosen presumptive taxation, you have to declare it based on turnover, and since turnover is always going to be a positive number, you will still have to pay tax in spite of actually having a net loss. So if you are opting for this, make sure that you are very confident on making profit every single year, because you will be declaring 6% of your turnover as the net profit. So Some CAs don't really recommend this. And also one more thing is, if there's a huge divergence between the 6% profit and your actual profit, let's say your 6% profit is coming to 60,000 rupees, but your actual profit is coming to 2 or 3 lakh rupees. So whenever there's a huge divergence of 5 to 6 times, CAs generally don't prefer using presumptive taxation. So this is on one hand. The second most important thing what you have to note is whether you have made a profit or a loss. It is very important to file your returns and put all the expenses. Let's say you have a 5 lakh loss instead of 5 lakh profit. So even in this case, you can actually claim all your expenses and make your net loss as 9.5 lakh instead of 5 lakh loss. So you might ask, what is the advantage of declaring more loss? The simple reason is, the next year when you actually end up making a profit, you can still set off this loss against your further profits. So that's the reason. If you have actually had a loss, don't worry. Again, gather all your bills, record the expenses, and you can declare a bigger loss which is going to help you out in the future. So now we just have hardly around 20 days before we finalize our tax. So it is very important that whenever we are claiming anything to be our expense, there should be a supporting document, and that is nothing but the invoices. So we have to produce our invoice and make sure that we have collected all our invoices to claim it as an expense. So for example, let's say you have traveled using any of the booking apps. So make sure you go to the history and download your invoice. You can download invoice from Uber, you can download invoice from Ola, Zomato. So you can just go there and download the invoices. So in case if you don't have the invoice, let's say you have done any kind of mobile recharge, internet recharge, you don't have the invoice, you can also drop a mail and request for the invoice and collect all of them and keep it in one place. Assuming that you go out to eat, just make sure you click the photo of the bill. So even when you go to a petrol bunk to fill fuel, make sure that you ask the person to give you a copy of the bill. So you can just click the photo and keep it with you in maybe a Google Drive or even your local hard disk. So just make sure all their expenses are kept in one place. So if this is the case, then you can easily claim the expense and also show the supporting document. So in case if you haven't been able to plan out your tax properly this year, no issues, you can still do it next year. Starting from April, make sure that you have the copy of all the invoices. So it is always better to keep it as a soft copy, because hard copy, the ink on it can get erased, or even it can get lost somewhere, it can get torn. So it is easier to maintain a soft copy of the invoice. And finally, coming to the last part, so since this is a business income, you will have to pay advance tax. So before 15th of March, you can sort of estimate what is going to be your profit and make sure you end up paying the entire 100% of your tax liability before or on 15th March. So it might vary by end of the year, that doesn't matter, but make sure on 15th March, so whatever is your profit minus all your expense, you should pay the 100% tax on it. And not just that, so in case if you fail to pay that, you will also be charged interest in the actual filing of returns. So this is something which I wanted to tell you before the end of financial year, so you can plan your tax accordingly. And finally, the most important thing is whether you are making a profit or a loss, it is important to file your returns, right? So if you have made a profit, try to make sure that you can use the legal ways to reduce your tax liability. And in case if you have made a loss, that is absolutely okay. So declare all your expenses and increase your overall loss so that you can set off against your future profits. This way you can try to reduce your tax liability. And not just that, one more very important thing, since it is a business income, you have to pay the advance tax on or before 15th of March. So whatever is your net profit as of 15th of March, make sure you calculate the net P&L after subtracting all the expenses on 15th of March and you pay the advance tax. So I hope this video was insightful and also informative. If so, make sure you hit the like button, share this video and subscribe to my channel. Thank you so much for joining.